Morning, morning. How are we all doing? How's everybody? Morning, Steve, Jordan, Burke, Diamond, Stevie, Gulam, Amy. How are we doing? Another day, another dollar. Wednesday. It's a big day today. FOMC, the big one. So prepare for a day of complete flatness or complete craziness, one or the other. We'll see what happens later. Yeah, big one today. Let's kick off with the news. So basically, we've just had the GDP figures come out for the UK, which came out as expected. I've just had a quick scan through the pound pairs. No real reaction at all on the pound. Slightly little bullish pop, but nothing much. So yeah, no reaction to that at all at the moment. So completely sideways on the pound. I wouldn't expect it to do an awful lot. It's an as expected news release, and it is only GDP month on month. It's the quarterly and the annual that is the important one. So, but it is the gauge, obviously, for quarterly. So, so that's all on target, which is good. Well, good for us in the UK anyway. Morning, Dreska. So, main news today: we've got PPI this afternoon at 1:30. I would expect probably a whipsaw off of it. Nothing particularly exciting because they're not going to want to drive any money in until we get that rate. So 5.25 is the forecast for this evening for FOMC, for the fund rate, and then 7:30 is the press conference. That's where the movement will happen, not in the announcement. Unless, of course, the announcement comes out at anything but 5.25, which is highly unlikely. Of all the releases in the world ever, I would say this is the one I would expect we are getting 5.25. I'll be very, very, very surprised if they give us anything different. But it's the Fed. So, yeah, that's all happening this evening. So but we'll be watching that like a hawk to see what happens with the US dollar. There's more chance of either that or that than that on the US. So it's more likely going to remain as it is or slightly bearish. So we'll see what happens, but all depends what happens there. Overnight as well, we've got the GDP for the New Zealand dollar and the unemployment rates for the Aussie before tomorrow morning's session. So need to just be aware of those as well overnight. We're going to get some movement on the Aussie. Pray for negative figures. Aussie dollar down. That's what we want. Overnight news. We've just had the GDP forecast come in as a 0.5 for the year on year, which is good. So again, more bullish UK. Apart from that, there's no news overnight. That's it. There was nothing, literally nothing overnight at all. Nothing from Japan, nothing. So yeah, completely flat. As you can see by the ADRs, we are flat as a pancake. Morning is time. Morning, Neo. So yeah, so nothing really to report on the news side of things today. It's all very flat. Boring. So yeah, ADRs, we've got nothing at the moment. It's non-farm payroll day, so fully expect something like that today. May get a little test of the highs. If there are anything near lows, you may get a little test of the lows. So for today, if you want to trade intraday today using stops, I would be focusing purely on yesterday's highs and yesterday's lows if you get anywhere near. Unlikely you would, but for something like this, it's not going to get down there, I don't think. So focus on the nearest support resistance levels if you do want to scalp anything intraday. But yeah, I wouldn't expect a lot of movement today. Market's going to be hanging around. PMIs might give us some movement. You never know. We do get movement off PMI. Obviously, it's an important inflation figure, so we'll see. So overnight, Windows decided to do an update. So I walked in this morning to my office and the test that I'd been running on the Dow has stopped. So I managed to get 785 passes done out of 1,056. So I've got 3/4 of the data. So I'm going to have to use that. I'm not restarting the test because it was a 3-day test. So it's a pain in the backside, but that's what's happened. So I've got some data now to start working with on the Dow, pretty much all positive. So of those 785 passes, I got 747 profitable. So 95+% is profitable. So yeah, all good. However, I am going to run some more tests. I'm not convinced about this version of the EA. I don't think it gives any edge, particularly over the previous versions. So I've got further testing to do. I need to do some more testing on ADR. Non-farm day trader effects UK non-farm. What about non-farm? Non-farm's not today, is it? We haven't got non-farm this week. Non-farm week. What about non-farm? Right, we've got 2 minutes to the open. So DAX today, yesterday, by the way, about 7% loss across all instruments yesterday, trying to trade that inside bar. So made a bit of a loss yesterday. Overall, though, still profitable on the test. So 12 grand up still. Long way to go to find that. So yeah, still good. You're not going away. There we go. So we'll watch the DAX. Let's have a quick look at the DAX. So today, no idea what's going to happen today, to be honest, but not sure whether we're going to get a lot of movement on anything today. So we'll see. But I would kind of class that not as a gap today. I don't think there is a gap there. So high of day would be yesterday's high. Low target would be I'd be looking more for yesterday's low, really, but the gap fill is what we're after. So 150 ADR downside, not going to get there anyway before the news, obviously. So you said non-farm today, did I? PMIs. Did I say non-farm payroll? FOMC. I don't think I said non-farm payroll, did I? I don't know. Maybe I did. News. It's all news. It's all the same stuff. Right, let's look at the DAX. So 12 seconds to go. Morning, Mark. So there's your pre-market ranges in. Wow, I don't know what happened there. We basically had, obviously, the candle close at the high pre-market. So we got a little bit of a spread for the high, and obviously it spread immediately and triggered slippage. So again, that paper that I got on the ORB where they said there's no slippage involved, they've assumed that they're not going to get any slippage. I haven't had a day, I don't think yet, where I haven't had slippage of 2 to 3 pips on something or other. So all these backtesting results, I'm factoring in a spread of 2. When you start putting slippage in, and this is one of the reasons I'm going to start running some different tests on this. When you start putting slippage in to the equation in your data, those results disappear very quickly. So this particular strategy on this pre-market 5 break is very, very prone to slippage, and in fact sometimes just not even triggering the orders at all because the market moves too quick. Broker doesn't get them on. So I'm thinking of running some different tests and some different conditions where the candle here has to be at least X distance away from the high. So if we've got a candle that closes, today's candle is exactly the scenario. If you've got a candle pre-market that closes at the high of the candle or within like a pip of the high of the candle, you're not going to get the results you see in a back test. You're going to get slipped by 2 to 3 pips, which is when you add up 2 to 3 pips every single day and take that off of your profitable P&L, it becomes negative. Too much slippage. So I'm going to retest with, it's going to hit TP. I'm going to retest with a filter where we have to be a percentage inside that actual candle before we trigger an order as an alternative. If that doesn't happen, we will then focus purely on the 5-minute break or switch to the 15-minute break. So the logic I want to use is if that candle is not conducive to trading because of slippage, the fact that we will get slippage on it, take a look, please, at the 15-minute range. If that isn't right, take a look at the 20-minute range. Yeah, so just basically trying to find something we can actually get on that is going to give us a positive result that doesn't include tons and tons of slippage. So that's on my list to look at today as an alternative as well. And the inside bar break that I'm working on with this strategy, I'm finding too tight. I'll go through that in a sec, but I've found another way I think is better to do it. So yesterday was a good example of, it's a down day yesterday, but you have a 7 grand day and down day, we have a 9 grand up day, don't we? So it's just another day at the end of the day. But I think there's better ways to do it. So so that's TP hit, very quick, very easy, $700 this morning, 785 banked, open 444. So propulsion gap there is filled. Obviously just missed it by a pip. So that is where I would look as your max today, really. If we're not going to get a trend today because of the news we've got today, I would expect rotation, and I would expect rotation to come off the highs. So we'll watch that area. TP 5R is just outside that. So obviously, we're not going to necessarily hit it to the pip. We're just going to react somewhere around there. So it'd be nice to get that. But we will see. Morning, Shroud. Morning, Andrew. Uh, 30 seconds to go on this candle. Nice big open today. So there's your pre-market 15. It's not even that. Look, it's slipped. And there's your 5-minute OR going in. Again, look at this close up here. So on the 5-minute opening range, it doesn't make as much difference as on this pre-market. This pre-market is a totally different beast because this candle here, the volume on this candle is up to 10 times more than that candle. So the 5-minute candle, as you can see, it carries on business as usual after that initial flurry. So you don't get the slippage on the 5-minute ORB. You do get massive slippage on the pre-5. So there's your 5-minute opening range. So that is your second entry today. I'll be wary about taking it long, but see where we go. Looks like it's going to stop out on a retracement. There we go. So stopped out. Net $1,000 this morning. So looking at yesterday, just quickly. Obviously that you can see that there was quite a few trades yesterday. This is the NASDAQ. So we had one there short. So there's an inside bar break short there. That one pushed down and stopped out for a small loss, not 100% loss. 100% loss would have been up there. Pushed up. We had another inside bar break there. Again, it broke it, immediately stopped it out. Then we had an inside bar break long off of that, which immediately stopped out. Then we had an inside bar break short, which stopped out with a small loss and a win. We had then an inside bar breakout, which double TP. We had another one there with a TP and virtually break even. Then we had another one there with 2 TPs. So overall, not too bad. However, as you can see, after the initial move, if we're going to get a rotation day, you get an awful lot of this. And if we don't get a second move on the day, these are the days where you will just get slaughtered. So I'm just trying to look at other variations of the inside bar break, because the inside bar break on a volatile day where the market is wanting to move is absolutely brilliant. It recovers any losses and banks loads of money, and it's fantastic. On a rotation day like this, it still will hemorrhage money constantly. So I think the better way to do this is to look at a 3-bar 15-minute range and take a 3-bar 15-minute range break. Because what's going to happen is it's either going to go into a trend or go into another move up into a resistance, for example, and then come back down, which gives us an opportunity to bank, or it's going to continue on its rotation. By taking a slightly wider range than an inside bar break, what you're going to find is you're going to get less entries. So in these big rotation choppies, you're going to get less stop outs, less loss. So it's all about trying to reduce loss and recover the ORB. So today on the DAX, for example, obviously, that's it. We're done for the day. Profit. Thank you very much. Walk away. I'll go and do something else today because I'm done. On the days when it doesn't go like that, that's what the loss recovery system that I'm designing is meant to do, is to try and recover this initial failed opening range break. And I think really you've only got that first sort of 30 to 60 minutes to do it. So that's where the volatility goes. So if you look at something like the S&P yesterday, yeah, so we had inside bar break short, stop out. We had a long there, stopped out. We had a short there, stopped out. We had a long there, stopped out. We had a short there, stopped out. We had one that worked there. Then we had a kind of break even there. S&P got slaughtered. So, you know. Harold, sound echo. I haven't got any echo on, no. Not as far as I know. Is anybody hearing echo? No more than my normal echo because I'm in a box. So yeah, so the Dow, for example, as well. There's your initial opening ranges and everything. So yeah, no, I think it might be your end, Harold. Short, that worked. Break even. We had a long stop out. We had a short stop out. We had a long stop out. We had a short stop out. We had a double long stop out. We had a short that worked. We had a long that worked, and we had a long that just about worked there. So these days, you need to reduce the amount of entries, I think, basically. So although I'm getting very good returns on backtesting with the strategy, with the inside bar break, I don't think there's enough variance in the results. Yeah. I don't think there's enough advantage in the results over the initial opening range breakout strategy. So the 5-minute ORB, I think, is probably the better of them to trade. However, I think there are rules we need to put in place to stop this slippage, because the real world slippage is going to kill you. It really is going to kill you. Those days where, like last week, we had one instance last week where we made something, I can't remember what it was. It was $1,000 risk, wasn't it? So $2,000 in total risk. We made $3,500 risk loss on a $2,000 risk because of slippage. So that's over 50% more loss than the backtest results would have given us. You factor that into an equation where you've got a return on drawdown of 5.19, that suddenly becomes a negative. Doesn't work. You put 50% slippage into the equation, you're dead. It's not going to happen every time, obviously. So I think it needs more work. That's my initial findings on it. And today is an exact example. Yeah, look at the difference there. Yeah, that's where the EA would have got me in backtesting. That's where I got filled. Yeah, that there is, if you measure that distance in real world terms, from there to there, which is where the EA would have got me in, that's 29 pipettes. The opening range is 55 pipettes. Yeah, so that's 50% of the opening range I've just experienced as slippage. 50% difference. absolutely vast. It just doesn't work in the real world. And you find this with a lot of EAs. You backtest them and they're absolutely amazing. You put them on a chart and it blows the account to pieces. That's why, because you don't get what you get in the backtest. It doesn't happen, does it? So NASDAQ's flying. S&P and the Dow. Everything going. Right. So anyway, I'll update you on that. I've got a lot more work to do on it. I've got a lot of ideas. It's going to mean that some days it's just not going to take any trades because the conditions are going to be wrong. And I've been doing a lot of work on ADR as well, which actually seems pretty decent, using ADR as a stop instead of using opposite end of range, which is an idea I got from that white paper that was published. So anywho, Harold, just hit my profit target in phase 1 with the opening range breakout. I owe you a pint of shandy. I'd rather have a pint that hasn't got shandy in it, but shandy will do. Good job, Harold. Well done. Yeah. OLB strategy, look, like this morning, bang, there's $1,000. Yeah, if you're looking at an 8% target, you just hit 1/8 of your target in 5 minutes this morning. ORB, when ORBs work like this, they are absolutely beautiful. You will make a fortune. When they don't work, they will kill you. So you have to, this is what I'm trying to develop, is a loss recovery strategy to try and get back those lost days as much as possible. It's not going to work every day. There's never going to be a perfect scenario where every day you're going to be able to get a loss recovery back either. Everybody's going to have a losing day. There's no bones about it. You're going to lose. However, there's ways of minimizing loss by getting the movements we see in the market. We know what happens after certain movements happen. So it's just being patient and waiting for those to kick in. So that's what I'm testing. Right. So let's get on with analysis. Not a lot of it. ADR is flat. The only thing we've got extended is Euro Swiss on the weekly, which we know about. That was yesterday. So Euro Swiss is extended to the upside. Got a short on that already. Target is that propulsion gap. So looking for a retracement back into there potentially before that move tomorrow. Don't forget, tomorrow is Euro rates, 115. So it's European finance rate going up to 4. So we should get a bullish move off of the euro tomorrow. So at the moment, hoping that we can get out of this today. So ADR is obviously all the way down there. So if we can get an ADR, it'd be fantastic. It's highly likely this will be lit up like a Christmas tree by 8 o'clock this evening, because everything will move off of the US dollar, off of FOMC, not non-farm payroll. So yeah, it'd be nice to get that hit today. But that's the only thing we've got hit on the weekly at the moment. And obviously it did that in one day, did 200% of its average daily range in a day. So that was the hit on the weekly, but pretty much we did the weekly on Monday, didn't we? So so that's the only thing that's hit there. Monthlies are still flat. There's nothing to look at on the ADRs so far today, and I wouldn't expect you to see much on that today anyway. RSIs, there's a few extensions now we've got that we didn't have yesterday. So yesterday was all focused up in this top corner with the Australian dollar. Today we are focused on the yen. So yesterday we had a lot of movement off of the yen. So Aussie dollar yen obviously is the one that didn't really move. But as you can see, Swiss yen, big strong move there. So Aussie dollar yen, if you look at it on the 4 hour, is extended. We are above the 80 level. I'm looking at these 4 hour RSIs that are not performing at the moment, and I'm thinking that needs to be moved up there. We are seeing a lot of 80 plus RSIs on the 4 hour at the moment. So I'm thinking the 4 hour strategy really needs to be, I think, a little bit fine tuned at the moment, because we're getting a lot of embedded movement on this. 70 for the minute. But yeah, we're embedded above the 80 now. Obviously, Aussie dollar yen is a bit of an anomaly because of the Australian dollar move that we've been seeing. As you can see, we've massive strong week, massive strong week, massive strong week. 3 weeks on the trot like that, not going to last. They can't hold it that long. So it is looking like we're starting to roll over on the Australian dollar. We've looked like that before, but massive extension on that. Really good opportunity for a short. I've got 4 shorts now on this from the hourly RSI extension back here. And as you can see, we've just stayed embedded above the 50 on the RSI ever since. just constant buying, no selling whatsoever. So when they do sell this, it's coming down very quick. Yeah. So you're going to get a nice pullback on it at some point. It's just a case of we are waiting, and hopefully today will be the catalyst to do that. If we can get that US dollar dropped today, we will get some movement in the opposite direction on everything else, because they will be pulling out of that US and they'll be piling it into other things, mainly into the Australasian side on the yen, hopefully. So good moves potentially coming later on that one. We are obviously just consolidating and going sideways at the moment. Morning, Gable. CAD yen also extended on the 4 hour. First entry on that on the H1 RSI extension yesterday. So that's extended on the 4 hour above the 70. Obviously on the hourly, you had the extension, just got it yesterday, just literally by a gnat's whisker. So that was the last entry there. Straight in, straight out. We're in there. Target on this one. So I'm going a little aggressive on this. Oh, by the way, I forgot to tell you, I've taken off targeting on the EA, removed it completely. So the EA is not going to get out automatically on the H1 RSI extensions at the moment. So the reason I've done that is because I want to test propulsion gap targeting, and I've been half building a version of the EA to test propulsion gap targeting. The problem, I think, with trying to do that in an EA is this is very discretionary. I think propulsion gap targeting, because we can tell an EA to say target that one, but if there's a closer one, target that one to make sure you get me out in a profit, just in case we don't make it to that one. But that is a discretionary decision. So trying to base a mechanical strategy on a discretionary decision is never a good idea, because the EA will not know what the best thing to do is. So I've decided to live test this and I'm doing it on this account, basically by removing the targeting on the EA. It is still targeting one ADR. So if there's a one ADR movement, it will get out. So if it moves one ADR like that, it will get out. The reason I've left that in place is if there's a news event and I'm not around for it and we get a spike, I want to take that profit. Otherwise, it's not getting out in any other way, shape or form. So if there's a propulsion gap within one ADR that looks good to get out on, that's what I'm going to target. So this one here, I'm targeting 125 ADR, purely because I think when we get a yen movement, it's going to be fast and hard. And I want to try and benefit from that, basically, by looking at where the market is likely to go. That's your ultimate. I can't hold and wait that long. Never have been able to. There's a little one there, and you've got that one there, which is not really an accumulation break. I would say that is probably the obvious target, but that's too close. So I've chosen that one as 125 ADR. So that's where what I'm doing now is I'm just going to drag TPs in. And if the market then squeezes further, obviously, and we go up and it needs a second or third entry, as I've been saying all the time, what we do is we'll adjust it. Okay, right, well, let's move our target up there. This is the nearest propulsion gap, biggest one, where we're likely to test. So I'm going to do that as a live test, basically, rather than mucking about trying to build an EA. I've been working on a propulsion gap EA for a while. And the problem I'm finding is the logic on which to pick. Every time you look at a chart, it's very different. So look at the CAD yen here. Obvious. Yeah. Obvious propulsion gap. The ones I'm interested in are the accumulation breaks which break a previous level. These are the big boys. So these are the ones where the market has pushed hard with the buyers because it needs to break through a level of resistance. That's what those propulsion gaps are. We know they get retested and often bounced out of. A la that. Accumulation, break, off we go. Yeah. These, when they get retested, are likely to get bounces, but they are also very highly likely to get tested. So trying to pick the size of propulsion gap is almost impossible. Which ones do you use? Those, that thing there, that one there, and that one there, I would amalgamate those together and go, well, that's a propulsion area, if you like. So that's why I'm targeting this, because I think if this one breaks and they break back down below this resistance, we're likely to come and test this area somewhere. You've got to tell an EA to target either the top, the middle, or the bottom of a propulsion gap. And if there's two close together, you've got to teach it to amalgamate those two together. And then if the size of that is bigger than this one, then use this one, else use that one there because that one's bigger. Do you see what I mean? The logic goes on and on and on. And it's virtually impossible to come up with a set of conditions that is, use this. So I decided basically to just manually test this. And then I can see it happening. I can see it all unfolding, and I can basically just make a decision based on what I'm experiencing as to what I think is probably best to program into an EA to try and automate this. However, I'm not sure that actually automating this is the best thing to do. I'm much more interested in getting into a position and then going, right, that's where I'm going to head. Shut my eyes, walk away and wait, because that's what you've got to do, isn't it? You've got to wait with position trading. So, and if that is the case, then I might incorporate that into sort of an addendum, if you like, onto the course as ways to target, ways to target targets, basically, isn't it? So, yeah. So anyway, long story short, CAD yen, that's a propulsion gap I'm targeting. Also, when you look at the size of that move, we're going to get a 38 retracement. An obvious one. So the problem we have with the CAD yen is obviously if the money comes out of the US dollar, it will weaken the CAD and it will flow into the yen, potentially. So this could be a massive movement. Yeah, massive big move. And as we know, we make the vast majority of our money on news. When the market has a fundamental news event, that's when everything goes haywire. That's when we hit the vast majority of our TPs, not when the market's just floating around waiting for things to happen, grinding around. We hit target when there's a big, strong movement. That tends to be on fundamentals or on any other news event. So these big targets at ADR 125, we got FOMC today. It could be down here, couldn't it? There's no reason why we shouldn't get 225 ADR if the CAD and the US dollar collapse later. So that's a valid target today as well. I'm not that greedy. Euro yen is another one. So again, euro yen extended on the 4 hour. We have been extended on this. Obviously, this is a big old uptrend. Nice big strong push. Euro, obviously tomorrow, rate announcement going up. In a normal scenario, you would say that's going to be bullish for the euro. I really at the moment don't know, because we're getting completely the opposite reaction to positive news events, positive increases in interest rates than we're used to. So it could be that they devalue the euro on that. I don't know. But at the moment, the yen is stable to weak. So therefore, this should continue potentially to go up. We had just had a push, accumulation push. This could be the accumulation before we retest the monthly high and it comes down from there. So, but good opportunity to get in short. Just be aware that there's news tomorrow. Pound Swiss extended. Swiss franc will power up with the euro. So if the euro goes, the Swiss will go tomorrow. We've just had positive news on the pound. It's coming down. Again, doesn't make any sense news at the minute. Mind you, never really has. So that is a monthly high reaction we've got. So that's limit orders triggering at this double top monthly high. Propulsion gap completion as well. So that's just limit trigger. Look for a pullback potentially on that one if you want to get into that one. Watch this accumulation area here. There's your propulsion gaps. Obviously think about where we are with the 24.72. There's plenty of movement to the downside on this if the Swiss franc powers up. No extensions on the hourly, so there's no entries. Last trade on that one was here. Exit. So again, looking at this one from a propulsion target point of view, if you want to get into this with a scalp intraday, perfect. Previous day's high, accumulation break, propulsion gap. You've got another target there at that high. So you're just using your head basically with them, really. So morning, George. So that's pound Swiss. That's extended on the 4. We've got the pound yen also extended on the 4 hour. See what the DAX is up to. So there's your ORB 15-minute pre-market today. Happy days. That's a big old win today. Shame I got stopped out on that. Again, going back to that testing. Your trailing distance. There's no trailing distance that has any edge over any other edge. Yeah, use a 150% of the opening range, use a 200% of the opening range, or 300% of the opening range. You would have been stopped out there no matter which one you used. Doesn't make any difference. So the only way to not get stopped out is by not using a trading stop, which means you would have got all of that profit. However, if you do that on most days, what you'll find is you'll just get stopped out. This is what I mean. There's no edge. There's no way of predicting this thing. And I'm not finding any edge in any kind of trailing stops on this. Some days it's good, some days it's bad. There's no advantage. But your 15-minute pre, if you'd have taken that, walked away and made a cup of coffee and then come back half an hour later, well done. Fortune. Pound yen, complete accumulation today. Look at this, Christmas trees. Oh, wrong one. Yeah, so down, up, down, up, down, up, red, green, Santa Claus has entered the market. Got one short on it from yesterday, ADR and RSI extension. Gone nowhere as of yet. There's my target. Again, 125. That is a really easy scalp short if you want it for previous day's high. So if you want to get out there, no problem. But that's what I'm targeting, that propulsion. Same thing. If this then decides, actually, we're going to accumulate and break up for another leg, second entry, target moves to that propulsion. If it moves up to there and leaves a propulsion gap there, target moves up to that propulsion. So we just keep moving targets in line with the closest big, decent sized propulsion gap. Again, completely discretionary as to which propulsion gap you use, whether you decide to use them together, whether you class them as individual ones, whether you only want to use this one because that is the break. This is pointing to where the market has moved, where the big boys have stepped in, placed their orders. This is where we're going to come back to. Yeah. Which one you use is totally up to you. And there's no logic I can teach in EA to say which is better than, there is no better, is there? A lot of people will be targeting that, knowing in full well that it's highly likely to come back to that. Yeah. It's all down to your hold time as an individual. When you get down to there and you've decided to target this and it pulls back like that and then pushes down again, hits that low and then bounces and accumulates there, the decision as to whether you take that much profit or hold for that is 100% down to your balls at the end of the day, isn't it? Can I hold it for another 2 or 3 days? And would I kill myself psychologically if it pushed back up and broke even on me? Yeah, that decision there is impossible to teach an EA to do. Which is why I think this is probably a better thing to sort of test as we are at the moment. So there's pound yen. Massive extension on the hourly and the 4 hourly. So first entry on that one yesterday. New Zealand dollar yen. Obviously, there's a theme running today with the yen. So big weak move on the yen, pushing up into propulsion. Again, you know, what do you target? The low, the mid, the high. Sometimes it bounces at the midline. Sometimes it doesn't. Sometimes it flies straight through. Sometimes it misses that high there. So if you'd have put your TP there, you'd have not got it, and it could easily pull back to here now. Totally discretionary. Somewhere in there, I'm interested. If it gets close and it puts in a bearish candle, I'm out. So yeah, anyway, extended to the upside. So with all of these yens, all these extensions we've got on the yens on the RSIs at the moment, this is the one you need to be paying attention to. This is where the Bank of Japan said, oi, stop it. And they did. If we get back up to there today, i.e. if FOMC causes a bullish US dollar move, that point there is the point of no return. That's when the Japanese will start to go, this is getting a little bit too weak. We need to rally it. So either way, I get the feeling looking at all of these yens at the moment, they are still pushing because of the weakness in the yen, but I don't think it's going to be a sustained move. So I think we've got a pullback coming on these at some point, but yen is notorious for getting squeezed against, and it's also notorious for absolutely undoing it in 1 or 2 days and then sitting around for ages doing nothing. It's a very difficult thing to trade. So all of these RSI extensions, they either want to play out quick or not. That pound yen one, that I got out of, was it pound yen? Yeah. So this pound yen one that I got out of here. There. Yeah, so this was an RSI extension. We sat there for 4 days. I exited it at break even because if you haven't done anything for 4 days, the likelihood is more weakness on the yen. Yeah, if the yen hasn't managed to get any movement back, it's probably not going to. So when you're looking at trading the yen, you want to be watching for, and picking a period of time where, if you haven't had a result on it, cut the loss, because the likelihood is accumulation push, accumulation push, accumulation push, which is what it does. So just be careful with all of these yens. They're a tricky bunch to trade at the moment. So that's all of those. We'll have a look at oil. Mark's just asked for oil. So I've got a really itchy nose today. I've got a feeling we've got ultra high pollen count in the UK at the moment because it's absolutely baking us. I don't have hay fever, but I do get like a bit of a all the time. Not proper hay fever where your eyes are streaming, but I think I've got mild hay fever. So oil, this is where I bought it yesterday. Not yesterday, day before. So yeah, sitting very nice profit on this now. So that was the bounce point we looked at. And I said, it's one of, let's look at the 4-hour chart, a bit clearer. So that's the area. We had a price discovery failure, retest, retest, retest. That's where I bought it on Monday. We rallied up into resistance, started to find a bit of resistance there, but it has managed to push through. So target on this one is basically that high, anywhere around that area. So, you can't pick a target. The market's never going to move to an exact target, but that's where we ran into resistance, turned to support, 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 resistance, 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 resistance. So this area, somewhere around there, is your high of range if we are going to remain range bound. So somewhere up there is where your target wants to be. My target is ADR 150. It's here. So I'm picking the most conservative target of the lot, that most recent high. It could get there. It could get there. It could absolutely fly and go up here. I've no idea. But that trade there, from a risk reward perspective, is a 10R. So that's oil. I have no idea if this is going to continue. If you look at it long term, obviously oil is massively bearish. However, this low that we put in immediately bounced up to make a new high. So we had a break of structure, bullish break of structure. We've put in a higher low, which is holding. So this is, although it's just doing that at the moment, it's still bullish. Yeah, until we break that low, we're in a bull market on oil. This was a peak formation low. This, they released the new forecast for oil in was it November, December last year? It was here, wasn't it? December. The new forecast on oil was 117 a barrel, which was up here somewhere. Yeah. Then they reduced the forecast in the new year back down to $95 a barrel. Oh no, 107, sorry. 107 was the forecast. They reduced it down to $95 a barrel. Yeah. And as they did that, we got a new low put in. Since then, they haven't touched it, and we have made a new high. So I think it looks bullish. Obviously, it's massively bearish right now, but what it's doing right now and what it's done in the past has got absolutely nothing to do with us, is it? Because we're interested in where it's going in the future. We can't forecast the future, so therefore you have to guess. I'm guessing that the analysts that have picked $95 a barrel by the end of this year are right, because they're the analysts, and that's what they get paid 6 figures a year to analyze, is where things are going. That's what the banks pay them for. The banks, Goldman Sachs, have said it's going up here. That's what their analysts are forecasting based on world events, current oil production, etc., 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 excluding wars, famines, etc., etc. Got to go with what they are saying. So I'm looking for long opportunities on it, and that's one I've taken. So like it as a long. You still get into it. It could well break that high. You know, if you're going to hold, if market structure is going to work, you're looking at breaking $80 a barrel. Yeah, so if that is our peak formation low high, that's $83 a barrel. That's where we're headed, out the top. So reversal alert on that, on the hourly was there. Again, if you're trading long swings, you know, if you're going to get into stuff from a speculative perspective rather than an intraday or intra-week perspective, you want to be looking at hourly reversal alerts and no lower than that. This is a great swing time frame hourly. So your hourly reversal alert is there. Stop under the low, retest, rally. That's what you'd be trading. That was the one. I took it on the M5 intraday because this level was just perfect. I got in there. So the reversal alert came in here. That's the one I took there. So that's my entry there. Came down, put in a lower low W. Stop was down here somewhere. Good to go. I'm break even on it now. If it stops me out of break even, I'm not interested because, you know, if it's got enough power to get down to ADR today, that's not bullish, is it? That's bearish. So I don't mind getting broken even on this at all. I want to be out. If it's not got enough legs to go from here after that rally yesterday, it's not the right trade. So should we wait for it to break the previous day high to look for buys on oil? I don't know. I wouldn't take a breakout trade. Buy it when it's coming down. Don't buy it when it's going up. Buy it when it's going up. You're getting in late. You've missed it. The fear of missing out trade. Buy it when it's coming back down again. If it doesn't come back down, doesn't give you an entry, you don't get in. You can do if you want to. I mean, if you want to buy a break of yesterday's high, feel free. But just be aware that there's a good probability of it doing that. I don't, you know how I work. If something's not extended to death or bouncing off of something that is blatantly obvious and everybody in the universe is seeing it, I'm not interested. So you can get in there. If you get in there and you put your stop under there, you got a 1.5 hour up to that high at $75 a barrel. If you feel that is a good risk reward trade right now, take it. Only you can answer that question. Agree the entry 2 days ago. Looking to add. Yeah, if you want to add, I mean, that's a good add. Assuming that we're going to run ADR. That's a good add there. That'll bring your average up into there somewhere. Yeah, good place to add. I'm just not adding to it. I'm just getting in and out. If you want to add, that's a good spot. Very good spot to add. Want to break the high yesterday. Break and hold, though, because it's rejecting at the moment. It's not rejecting, but so there's yesterday's high, that dotted line. That dotted line there is previous day's low. High. Previous day's high, yeah, sorry, yeah. So this whole area here, this propulsion gap, is made up of the previous day's high and yesterday's high. Break above those two would be obviously a much better confirmation. But oil will move as well. Don't forget, FOMC this evening, oil is priced in dollars. What happens to the dollar this evening is going to affect oil massively. You're going to get a big move on oil later. Morning, Brian. So yeah, that's what worries me about it, is if we get a massive move on the US dollar, a massive negative move on the US dollar, we could get a massive negative move on oil, in which case I could get stopped out on that. And if that happens, it happens. If it just retraces and whizzes all the way back up there, what happens? You've got two options, haven't you? If you've moved something to break even and you've got a news event coming up and you're worried about getting break even, why did you move it to break even? Should have left it there. I've moved it to break even because I'm unsure about this trade. Because every time oil has said, looks like we're going to make a new high, it's completely collapsed and retested the previous level. Look, massive rally. You'd think, wow, look at oil go. Oh, it's gone up into a resistance. Smashed it. Oh, brilliant. Gapped up. Fantastic. Collapse back to where it was within 4 days. This thing is completely irrational at the moment. So you can't trust anything it does. I want my risk protected. Capital preservation. If you haven't got capital, you can't trade. Preserve it. Right. That's all I got for you this morning. DAX is still on the march. So, yeah, that would have been nice to hold. There's your 5-hour target hit. If I hadn't had that trailing stop, I'm finding a lot of this. I've been testing now DAX and indices and the opening range for virtually a year. This is using a 200% opening range trailer. My brain is saying, oh, if only I'd have left it. I had this set at 300% yesterday. If I'd have left this set at 300% ADR, opening range trailer yesterday, I wouldn't have been stopped out there and I would have had $3,250 of profit. However, I decided to change it yesterday to 200%. Therefore, today I only made 1,000. The difference between making a massive win and a tiny win is literally a percentage of that. And this is what I'm finding in backtesting. Doesn't matter what you use. Some days that is the best thing to use. Some days that's the best thing to use. Other days you'd be thinking, oh, why didn't I use that? Oh, if only I'd have used that today. But overall, the edge is there. Yeah, every single test I'm doing on every single system parameter permutation is profitable. They're all profitable. Doesn't matter what settings you use, they all generate an annual return. However, the difference between using a 600% trailer, a 150% trailer, and a 300% trailer is the difference between 60 to 100,000. But at the end of the day, which you pick is not going to help in any way, shape, or form. Because days where, like today, you're going to look at it and go, oh, if only. Yeah, if only everything. Hindsight, absolutely useless. Hard right edge, you've got no idea what trailing stop you need for today's movement because it hasn't happened. So you just can't pick one. Just use the opening range breakout EA, take the breakouts, you'll make money. Some days you'll lose, some days you'll win. If only we knew which days they were. Back to the future. Somebody needs to invent that DeLorean. If I could get that DeLorean, literally, I'd only need it for a week. If I could predict the future movement of the DAX for the next week, I could literally live off the money because I would just immediately get £1 million from somewhere, wherever, beg, still, borrow, banks, get as much money as you can together and literally get the ORB right to the pip for a week. That's all you need. And you'd be set for life. Going with 50% risk per trade. I'm going with 100% risk per trade because I know exactly what's going to happen, don't I? Wouldn't that be nice? Morning, Amar. Morning, Bogdan. Henry, do you know anything about Nova Funding? No, never heard of them. Just another prop firm. Why do you need another one? What's wrong with the ones we've got? They're all the same. They're all run by 8cap. Might prove me wrong, this one. Anything about your broker? Foreign Exchange Clearinghouse. Oh, that's a new one. Never heard of them. No, I've never heard of overfunding. They're not 8cap anyway, put it that way. So that's a good thing. One step evaluation, $100 more expensive than my Forex funds. upgrade to live 72 hours. I'm not waiting 2 days to get my live account. That's ridiculous. News trading allowed, EA's allowed. Daily drawdown and max drawdown are smaller than everybody else. So that's 1% less than everybody else gives you. That's 2% less than everybody else gives you. Apart from that, yeah, they're more expensive. There's a lot of companies doing these one-step evaluations now. They're becoming much more prevalent. 50% profit split. Do one. That is who Fidel uses. Oh, is it? What were they called? Something clearinghouse. Let's see if they offer a white label service. No. Romania. Oh, they're Seychelles. Okay. Yeah, don't know. Never heard of them. I mean, there's nothing wrong with them. A broker. I mean, you need to try them, see what the execution's like, see what the spreads are like, to see what they're like in general. But as far as Nova Funding is concerned, they're offering a much lower profit split than everybody else. Forget profit split 2 and 3, which I assume is month 2 and 3. You're not going to get there because the account will be blown. By 98% of people won't get to that because they don't pass the second month because they blow the account. So every broker, every prop firm you see with a scaling plan, just go straight past the scaling plan part. You're not going to do it. I have nobody I know that has got ever scaled. Ever. And I'm in pretty much every funded Discord group there is out there. No one's scaling their accounts. That's not how you do it. You don't hold accounts. You could do if you're going to trade. I mean, there probably are people that scale, but they're the people that will be taking 0.25% risk with a stop loss, and they'll be doing it over a period of a year. So yeah, you could scale very long term if you wanted to reduce your risk massively and you had a strategy which didn't get a losing run at the point. You know, it's just there's a lot of variables, but that's what you want to focus on. What are you going to pay me? 75% plus is what I want. Anything less than that, I'm not interested, especially if you've got worse trading conditions than my Forex funds and E8 and you're more expensive. Just no point. Absolutely no point. Go to the trader funding page. I haven't got many one-step evaluation guys on here because there's more and more of them coming out now. You know, look at the payouts. This is why I put month 1 profit share. It's important. If they're offering you 80% payout or 90% payout in month 3, you're not going to get that. You're going to get whatever they're going to give you in month 1 because you're going to pass the evaluation with a lucky streak. Then you're going to get your funded account. You're either going to blow the funded account or you're going to get a lucky streak where you get enough money in it to withdraw in month 1. Then you've got to rinse and repeat that for 3 weeks. So your system has got to hold up with a decent streak for 3 weeks without hitting that 4% or whatever it may be daily limit or the max loss. Yeah, most of my accounts, they last 6 weeks. I'm having a run. You're never going to get scaled out to phase 2 on anything that's got a scaling plan. Well, I'd say you might do. I don't know. I just don't know anybody else that does either. So I'm only taking it from my experience. So is Fiddle Crest uses foreign exchange? Yeah. I'm testing PT on demo. What indicators can I use as a rough approximate for the market reversal indicator? I'm testing PT on demo. Position trading, does that stand for? What indicators can I use as a rough approximation to the market reversal indicator? No idea. I don't think there are any, are there? How much total funded are you? I've never got more than a couple of hundred at a time. because I can't hold them because the market doesn't allow me to hold them. Look at the opening range breakout. Yeah. So, I mean, look at this one this month. $11,730. So we are 14 days in. Yesterday, that was sitting at 18K ish, somewhere thereabouts. Yeah, that could be sitting at -2 by the end of this month, -2K. I've no idea what's going to happen in the future. What I do know is if I can get a decent ORB on the DAX in the morning and make 2 to 3K, I can get a decent ORB on 2 of these in the afternoon and make 3 to 5K. Yeah, I'm somewhere in the region of passing an evaluation to halfway to an evaluation in one day. The next day, if I can have a decent ORB, I will pass evaluation. Then I can scale back, trade ORB, and hope we have a decent run. If we don't have a decent run, I'll blow the account. That's the way prop funding works. So I've never got an account I'm holding for more than a period of 4 to 6 weeks because the market will either blow it or make me enough money to withdraw that funds. So I'd love to have, I could have $1 million if I wanted to, but I'd have to spend an absolute fortune getting it, wouldn't I? I'd have to run like 20 evaluations and spend 15 grand or something. I don't need to. You don't need to do that. 100K is more than enough to make 5 to 7K a month. All you need. You don't need more than that. But don't expect to hold it. If you want to hold it, then yeah, you're going to need a lot more than that. It's funny. My wife's cousin lives in Australia, and his son is thinking about trading. And he sent me an email yesterday, and basically saying, you know, he's thinking about starting up trading. He wants to become a day trader. What's your thoughts? What's your opinion? So I basically told him the honest opinion. Yeah. If you haven't got $100,000 in the bank, you will never make it as a day trader because you're trading completely random price movement. The banks don't day trade for a very good reason because they can't predict future random movement of a candlestick from one candlestick to the next. You can predict when a movement is going to happen, but you can't predict the direction of it, which is what the opening range breakouts edge is. It doesn't know which way it's going. So what it does is it goes, well, if it goes long, we'll go long. If it goes short, we'll go short. And it hopes that we get a decent move. Has it got any indication of where this thing is going? No. Have the banks? No. The banks are going to execute a massive batch of orders in one direction. Have the banks got any idea if the other banks have got bigger orders in the opposite direction? No. So is it a viable strategy to keep trying to guess the outcome of the next 5 minutes worth of price movement up or down? No. What do day traders try and do? Exactly that. Why do they fail? 95% of them. Because it's physically impossible to do. You've got to be lucky. Can you, however, look at the fundamentals of an instrument and extrapolate based on the economics of that country and that instrument where this thing is likely to be going over a period of 1 to 3 months? Yes. Why do the banks pay analysts 60 to 100 grand a year to figure out what is going to happen? Because that's the way you make money in the markets. So my advice to him was get him into banking. If you want to make any money in this industry, the only people in this industry making money are people that are selling courses and banks. Because everybody's trying to predict the future, which is a random event, and you can't do it. However, if somebody's willing to give you 100 grand on loan for a couple of weeks and you have a system and strategy that has good runs, you can take some money out of it. That's the way to play prop. You can't make a long-term living out of prop. There's YouTubers I have been following for a year. And if you go back over their videos for a year, they have titles on their videos which says something along the lines of trading an FTMO 150K funded account, day 1, day 2, day 3, some other video title. I've switched over to Ninja Trader. Why? Because that funded account just got blown. Another video 3 weeks later, 100K funded FTMO account, trading with it. Yeah. And then all of a sudden it changes. I'm now using TradingView. Why? Because you're system hopping, because you just keep blowing accounts. That's what you do. That's what everybody does in this industry. There isn't anybody out there on YouTube that I've seen that said 150K funded FTMO account, day 97, scaled up to level 3, now trading 300K funded FTMO account. No one. Why? Because no one's doing it. It's not possible. Prove me wrong. Someone go and find me someone out there that's traded a funded account for more than 4 weeks and has still got it. That's basically what I put in the email. Yeah. Don't believe the Lamborghini crowd. Don't believe the smoke and mirrors. If you want to make money in this industry, create a course and sell it. That's basically the way to do it. Or join a bank. They've got the money. Sorry, did I just blow everybody else's bubble? And I actually sent it to my wife's cousin rather than sending it to his son because I didn't want to burst his bubble without his father's say-so. But it's the real world, isn't it? That's where we live in. This is why, there are ways to make money in it. Don't worry. You can make money. But day trading, what people class as day trading is intraday, trading within the day's range. And we know that all that movement is that we're seeing intraday is just orders being placed by banks. And it's completely random. So you literally flip a coin, you're going to get the same result as if you use an indicator. The odds are always the same. What people cannot do is manage risk reward. That's the bit that people can't seem to keep doing, which is understandable because every time you get hit 5 times in a row with a stop loss, it's the psychology that breaks your system. The risk reward is absolutely fine. The strategy is absolutely fine. The fact that you can't handle 5 losses in a row is why people fail as day traders. When you're swing trading, long-term movements over 4 to 12 weeks, that doesn't happen. Position trading, that doesn't happen. The psychological part that stops you as a trader doesn't happen. Yet that's what every course out there teaches you. That's what every prop firm is set up to trade. High risk reward, intraday price movement. Futures markets. Anybody who trades on futures, if you're trading with any prop firm in futures, you can't hold overnight. They are forcing you to predict random market movement, which is impossible to do. You can't pass and keep the accounts. You can pass, you can have a good run, you can extract money, but you can't keep it. So that cycle of pay for evaluation, fail, pay for evaluation, fail, pay for evaluation, pass, funded, fail, pay for evaluation, pass, get paid. Yeah. If you do that 10 times and you do that twice and the value of that is higher than that, that's your business model. That's prop. That's how you make money in prop. Which is why I say with that firm that we're looking at, forget that. I can get 75 to 80% everywhere else. Why would I take your 50? That's the worst offer I've ever seen in my life. It's 25% less than the other competitors in the marketplace. Forget those. I'm not going to achieve those. And everyone else gives them to me on month 1. Which is why I've made that list. These are the guys that will give you the best conditions for payment and trading based on the most important thing, which is cost of doing business. How much does it cost to get a 100K account? That's the most important thing because you're going to be getting a lot of those. Anywho, that's prop. We know about prop. I've told you about prop many times. And I will continue to do it because people keep asking. If you isn't FTMO's drawdown plan fixing not trailing, what? if you isn't FTMO's drawdown plan fixed not trailing, wouldn't that give an opportunity to build up a buffer zone? Yes, yeah, it does give you an opportunity to build up a buffer zone. Yeah. So what you're saying is you've got to take that 100K account up to 108K to give you that buffer zone and then go on from there, right? Let's do the maths. You got 100K. They asked you to do 110K right? Increase the account by 10% in phase 1. Then they give you another 100K and say, give us 5%. I'm just picking numbers. I don't know what the exact targets are with them. But so in a period of time, usually weeks, they've asked you to return a 15% return on a 100K account. The average trader that is profitable and consistent makes somewhere between 5 to 10% a month. So what they've asked you to do in less than a month is generate twice as much as the average profitable trader makes. You've got to be lucky to get that. Yeah. What do you think the chances of you building a buffer zone on a funded account are and actually managing to get beyond that buffer zone without gambling? Think about it. Yeah. If you could realistically return 25% a month, which is what you would need to pass 2 evaluations and build a buffer zone, do you not think Warren Buffett would have you up against the wall like that going, tell me your secret, because I can only make 8% a year? Possible. And if it is possible, I'd love to see someone that's done it, because I haven't found anybody. I'm in all these groups. Don't forget, I've been funded with virtually every firm on here. Not everyone, but I've been funded with half of these guys. And I'm in all their Discord groups. I'm in all their Telegram groups. I'm in all their socials. Yeah. I don't see the same faces posting constantly about the amount of money they're making. I see different faces all the time, and old faces vanish. No one in any Discord group or any of those companies or the other ones that I've been in have ever told me they've made any long-term. They've never sustained a long-term account. The buffer zone is there as a hook. Yeah. We will give you this. The realistic chance of you achieving any of those isn't there. But here's the carrot. For just $500, you can have all of this. It's like the old everybody, you're in the UK, you probably see the adverts for Omaze, yeah? Let's go to the website and have a look. They're brilliant. I love it. It's the same as the lottery, right? Omaze, the £1 million house draw, yeah? So you could have this nice Porsche Taycan worth 100 grand. You can have one of these houses, they're worth 300 grand. All you've got to do is pay for a ticket. It sounds amazing. Oh, there's the carrot. Isn't the carrot huge? What's your chances? 1 in 25 million or something? I don't know. I don't know what the odds are of it. I've no idea. But it's not, that person's won that. Well done. What about the other 1.7 million people that didn't? The carrot is always the bigger thing. The reality is not the carrot. If you've been trading long enough, you know that. Yeah, it's the Lamborghini. All that's happened is the people selling courses, driving the Lamborghinis, have moved into prop. They're now selling the Lamborghinis packaged as a prop firm. It's the same thing. They offer you free courses. CTI offer you paid training courses to teach you how to trade so that they can get you into their prop firms to take their evaluations, knowing full well that 90%, 95% plus of the people that have done the courses and paid for the courses will also pay for the prop firm. It's another revenue stream. However, you just need to know how to bend it in your favor to extract the money out of that revenue stream away from them. Become one of the 5%. It's no different to normal trading, is it? The way you stop losing is by stop using stop losses. Then you stop losing because you don't have a position in the market to take you out and get you stopped out. If you want to trade prop, you need to understand you need to take multiple props because you're going to have a failure rate on them. So therefore, if you take 3 evaluations, you'll probably fail 2 of them. The one that you get, you've got to have a lucky streak to get paid on. So if you take 10 evaluations, you might pass 2 to 3 fundeds. Of those 2 to 3 fundeds, if you're running different strategies on them, one of them might actually get you paid. If that is bigger than the amount you paid in evaluations, you're a profitable trader. Just another way of milking the market, isn't it? So, clever, isn't it? But yeah, buffer zones. I mean, there's another one. I can't remember who it is. There's another prop firm that's just said that they've changed their drawdown. So their trailing drawdown no longer goes from 10 grand. As soon as you get to 5 grand in profit, it jumps to -5. So if you're 100K, for example, as soon as you get to 5 grand in profit, the trailing drawdown stops at 5K and never goes higher than that. So as you get further, that buffer zone is bigger. Oh, excellent. I get a bigger buffer zone. If you've made it to 5K in profit on that 100 grand account, you need to stop, press the withdraw button and take that 5K, because the probabilities of that 5K turning into a 0 or a -5 and stopping you out and blowing the account are way higher than you turning that 5K plus into 15. If you've been trading for any period of time, you know that's the truth, because you've been doing it for a long time, watching your P&L go up and disappear, go up and disappear. Why do you think Prop's different to that? It's a demo account. How many demo accounts have you blown? Why do you think you should pay $500 to blow another one? Carrot. The more carrots they have, the more you want to trade with that carrot provider. With donkeys. Aussie New Zealand. Sorry, I've gone off on a mission. So Aussie New Zealand, we had a lovely move on this yesterday. Hourly reversal alert yesterday. We pushed down, we ended. So looking at it on the daily, we ended with a bear candle. So we are in an accumulation. We still need to break this level. We still need that to get broken, to get a decent wiggle on this. So we lasted 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days up. We are now 5 days sideways. Looking for that profit take. So today potentially is the day that we're going to start that move. So we've got the reversal alert in. We had a reversal alert here somewhere as well, which didn't hold. Yeah, so we pushed down and then we pushed up and got a second leg. So there's your M pattern there. So it's an uneven M, stop hunt M. There. So that is holding beautifully. So if market structure is going to be a peak formation high, yeah, we're looking for previous support, turn resistance and put in the next leg. This is what we need to break. That specifically, that hammer there. So this is kind of an overnight spread candle. That is actually the target to break. So we want that level broken. If we can get through there today and get anywhere now down near ADR, we should be coming down to test these highs and this propulsion gap. So as you can see, all my targets are sitting, half of my targets are sitting at the top of the propulsion. The rest of them are sitting above resistance, previous resistance there, which will turn support, which is at 150 ADR. If we get everything rallying off of a big FOMC this evening, there's every chance that this could be down there. Tomorrow, unemployment figures for the Australian dollar could be down there. We've also got New Zealand dollar news. So the absolute ideal for me and anybody short Aussie New Zealand at the moment is the New Zealand GDP, instead of a minus 0.1 to come out as a minus 100. Yeah, huge negative. Positive we want. Sorry. Wrong way around. GDP, instead of coming out as a minus 0.1 to come out as a plus 100. Yeah, big, strong New Zealand dollar driving down Aussie New Zealand dollar, followed by unemployment rates, sorry, Australia, if you're there, going up to 4%. Target hit, all losses for the week undone, happy days. If it comes out the opposite, it's scale out time. I'm going to have to get out of some of this. Been scaling out gradually along the way because the squeeze has been absolutely parabolic. But that's the first proper sign, I would say. We've got expanded volatility and we've got a reversal in structure. So it's looking good. We've had it looking good before though. So today, if we can break the low of the day today, I think we've got every chance of getting that run started. Obviously target, look at propulsion. These targets here previously, we pushed away, we came back up. Yeah, so all these old propulsion targets all got filled. Yeah, there's absolutely no reason why all these old propulsion targets will not get filled. It will do an A-shaped recovery back down to here. It may not. We've no idea, have we? But you can only target what you can see. And what I can see is that accumulation break there that caused that second rally. So this is 6.5 ADR in one direction with no profit take. if you're going to get a 50% retracement, we're looking at a 3 ADR drop. I'm not going to get that greedy because this thing's hurt. I want out. So, but I'm getting out at a level which is going to give me a decent return as well. So calculated risk may or may not work. But I think today is the day that we will find out, because we've got some serious news, which is potentially going to move that today. So, Brian, I still get that binary options feeling with prop. So far, so good with Fidel, just waiting for the show to drop. Shoo. Yeah, well, you will get paid, Brian. I mean, I've been paid multiple times. There's not a binary options thing. The binary options thing was literally a coin flip, 50-50, and the odds were stacked against you. The difference between binary options and prop is binary options had a capped upside. Yeah, prop, there is no cap. Yeah, if I go long this morning, right, take this morning on the DAX. If I hadn't put a trailing stop on this morning, yeah, I risked 1% there. I had a 6R return. That's $6,000. Binary options, you had a 1.1 stroke 1.2 R because you were going, will it go long or short? That was your option. It was a binary 1 or 0 option, long or short. My prop is it going long or short? My upside can be 20R. That's the difference between prop and between binary options. It is stacked against our favor. Obviously, all trading is stacked against our favor because most people are trying to trade intraday, which is obviously stacked against you because it's the banks moving it up and down and you don't know what's going to happen. So everything that you do is a 50-50 shot at the end of the day, except the 50-50 shot has a limited downside and an uncapped upside with prop. You've got the problem with prop is the 5% intraday drawdown or the 10% total drawdown. Those are your limitations. So as I've said in here before many times, the only way to make money out of prop is to have a strategy that has a half decent strike rate, like the opening range breakout strategy, and has very high returns on occasion. Whether or not you get paid, pass, or keep an account is based on whether or not you get more of those days when you're doing it than those days. That is the only thing that makes you profitable or makes you get paid. You don't know which is going to be on each individual day. We've had an amazing run with the pre-market 5 ORBs over the last week. I've banked 18 grand. We had a terrible day yesterday, but that's the first really terrible day we've had in the last week. So if you started prop last Monday, I mean, somebody's just said in here today, they just passed their prop evaluation with the ORB. Well done, brilliant. What's going to happen next week? No clue, don't know. I've got no control of it. So eventually you stop thinking about it. You stop worrying about it because you've got no control over it. Stop trying to control. There's a video on the website about that. Control. Stop trying to control something that you can't control. Yeah, you are not in control. I've got to find it. Yeah. You're not in control of prop. You're not in control of anything in trading on any time frame lower than the hourly charts. Anything above the hourly charts, you've got half a shot of analyzing what the hell is going on based on prior market movement. On the M5 chart, prior market movement has got absolutely nothing to do with anything, is it? But that's where they force us to sit because of time constraints, all the constraints, all the carrots. They're all there to, all the rules are there for their favor. The carrots are there to dangle, but they know that the rules outweigh. It's the same as going into a casino. You go into a casino, you play roulette. Everybody makes loads of money and they're going, yay, yay, yay. They put the money on, then it comes out at zero and everybody loses. They make more on that zero loss than they ever pay out to everybody that makes money in roulette because they've got an edge. That's the prop firm's edge, that drawdown limit and the fact that they know factually based on every trader's experience ever in the universe that no strategy can sustain a winning run without a losing run. And every losing run that occurs typically at least once a month, if not more, is going to blow the limits set by the prop firm. So the purpose of their rules is to make sure that no one can survive more than 4 to 6 weeks. So you've got to be lucky. Everybody's lucky. Everybody can flip a coin and predict a run of 3. At some point, you'll get it right. That's your funded account. That's your payday. You just don't know how many times you've got to flip the coin. I've passed two E8 evaluations day after day, 200 grand, 48 hours, lost one literally within days. It happens. It happens all the time. It's just the way of the world, isn't it? This is what I was kind of explaining in the email that I wrote back to my wife's cousin. You know, it's like, don't believe the Lambos. The Lambos are there to show you what you could have won. Yeah. I haven't got one. But if I show you that picture, what do you think? If I put that on my website, a picture of me standing in front of a Lamborghini I'd rented, yeah, with a Rolex on my arm, you would psychologically attach the fact that my methodology of trading produces a Lamborghini. That's what I think my wife's cousin's son has seen. That. And he's gone, oh, I want a Lamborghini. Not like this, you know, mate. Create a course and sell it for 2 grand and sit in front of one, then you might be able to buy one. Not mentioning any names that you might see regular adverts for running along YouTube. What do I think about pound yen? I covered a pound yen already. So we're extended on the hourly and extended on the 4 hourly. It's on the side here. Look. There you go. There's pound yen. It's extended to the upside. I'm short, basically, with one off of the hourly RSI. In an uptrend, so it's a counter trend short. Don't get greedy. Watch yesterday's high for a pullback if we get one. But I bet everything you're going to look at today, it's all FOMC. So today I would say, you know, that's what you're going to get until 7 o'clock this evening, 7:30 this evening. Then everything's going to go crazy. So I wouldn't expect a lot. Might get some movement out of PMIs. More likely whipsaws. What you might find on PMIs today is we just literally get a whipsaw to clear the deck. So every high and low, not every high and low, but a lot of highs and lows would just get taken out with a whipsaw, clear the decks. They'll have a book balance. Then they can take wherever they want to this evening. So, see where we go. I don't know where we're going this afternoon. Will you make your TPs closer to break even when doing drawdown control? You move your TPs closer to break even when doing drawdown control. Drawdown control has got nothing to do with TPs, really. Drawdown control you do along the way as you see fit. Where it's going to, obviously, will change based on drawdown control. So when you're doing drawdown control, if your average is there and you do a bit of drawdown control, your average will move closer to price. So if by doing drawdown control and moving your average closer to price, it puts a new target, which is more obvious, below your break even, then you would move TPs, yes. DAX is topping out. So here, for example, so you can see, obviously, that was the initial position. Done some drawdown control along the way on this in 4 positions now. Average is there. So if this spikes up and does drawdown control on those 4 positions again, this average will jump up to there. So the TP that's down here at the moment could potentially move up to there, couldn't it? That gives me that much profit, which isn't a lot, but it gets me out of a bad situation. But look at the propulsion gaps on this. I mean, it's just, you know, when you talk about target-rich environment, that is a target-rich environment, isn't it? However, it's going to require a strong US dollar. I'm not sure we're going to get that. So, you know, What do you think everybody was thinking here when they were here long? Oh my God, look how far away we are from that. Oh. What do you think we're thinking now? Oh my God, look how far away we are from that. Next Wednesday. Holy crap, we've moved away from that for 4 days. Oh, yeah, propulsion gaps are there for a reason. They show you where price is highly likely to go to next based on market movement and market structure. Yeah, if market structure is going to retain a range-bound structure, that is your range low, that propulsion gap is going to get filled sometime in the next 2 to 3 weeks. If, however, the fundamentals shift on the US dollar this afternoon, that thing's going to fly and this is all going to become orphaned. We've no way of knowing the future. Again, I keep saying it. I have no clue whether this is going up or down at 7 o'clock this evening. I haven't got a clue, but I'll deal with it when I deal with it. I haven't got a choice, have I? You deal with what you get given by the market. And the market, 90% of the time, will do what you expect it to do at some point. 10% of the time, it won't. Those are the times you're just going to have bad runs and bad losses. There's nothing you can do about it. You have to take them. Just waiting for the day the website disappears. My skeptical side. Oh, you'll be right with Feudal Crest. Yeah, no, you'll be right with Feudal Crest. Check out, I mean, always check them out. Yeah, they've been around a long time, Feudal Crest, yeah? A long time. They updated 2000. Oh, they've updated their servers, but 2019, Feudal Crest was registered. Yeah, they obviously switched servers in January. Oh, they moved there to Cloudflare, I'd imagine. But they've been around a long time, Feudal Crest. They're not going to disappear. They're well funded. You know, they're not a small company. You know, look at things like Trustpilot and just do your due diligence. There's 806 Trustpilot reviews here. You're going to get the odd idiot. They're a scam. They got, I mean, whenever I read these things, you've got to remember this is a worldwide industry. There's a lot of people in third world countries, nothing against them in any shape or form, but sometimes they're not quite as clever as other people. When you read some of the comments you put on here, you can tell that these people are never going to make it in trading. They didn't understand the rules. They didn't read the rules, and they just think they're getting scammed because they're just plain stupid. There's a lot of people out there like that. There's nothing you can do about it. So they are a scam. They got me to tears. Yeah. Doesn't make sense. That's not English. Just lucky I was able to get all the money back after fierce disputes for weeks and the relentless efforts of the firm I filed the disputes through. Feudal Crest made false promises, and after completing the phase, nothing happens. They gave incoherent, flimsy excuses. Just got my 6,500 back. 6,500 what? Firm is ribstonlimited.com helped me with the case disputes. No idea. But there's one negative review out of the 85% of people that have had a good experience with them. Yeah. Scam, run away. You get these. I mean, the other thing you've got to look at the names on these things. That one's not too bad, but a lot of these reviews are review bombs. You can pay. You can go onto Fiverr, right? And you can review bomb your competition very easily. Yeah? You've got to read these reviews about these companies. You know, payout proof. I've got payout proof coming out of my backside for Feudal Crest. I don't have a problem with that. I know people that are paid with Feudal Crest, and I was waiting for you to get paid, Brian, as well. So you can tell me. But join the Discord channels, join the Telegram groups. Yeah, spread too wide, especially on Asian session early morning. No crap, mate. Idiot. Spread is too wide during the Asian session in the early morning. Really? If you don't know that, you're just stupid. Again, some people are just plain stupid. I trade gold. Well, they're obviously just plain stupid, aren't you? Nothing against gold traders, just stupid. But anyway, no, just anybody on this list. The reason I put this list together, nobody on this list hasn't been around for years and years and years and years and years. If anybody's been around for less than a year, high probability they won't be around in another year's time. Prop firms go bust all the time because they get a lucky guy, right? You've got read the rules, read the contracts. Somebody sent me a message the other day about someone got an email saying that they wouldn't fund them. They wouldn't allow them to do any more evaluations because they'd lost them too much money. Like, well, and then this company claimed that they'd lost them $46,000 or something. For a start, they won't be funding with real money, so I don't know where that came from. But it was to do with their strategy. They didn't like the strategy. So you read the small print. There will be keys in there that say you're not allowed to use martingale. You're not allowed to do this. You're not allowed to do that. You're not allowed to trade through certain news events. You've just got to read the rules and follow the rules. The people that leave negative reviews and get caught out are the people that just don't play by the rules. There are rules. I've been caught out by rules before, especially on futures. I've been caught out by rules many times. I don't do much on futures anymore because they're harder, but the payouts are much bigger. They do due diligence. Yeah, CTI, Daniel Martin, the CEO of CTI, very experienced trader, been around a long time, knows what he's doing. Just don't agree with their new business model of selling tons of courses. They're the same as a broker. Brokers sell and develop courses to make you press buttons. The more you press buttons, the more money brokers make. The more courses they sell, the more people will get funded with evaluations, the more money they make out of evaluations. I can understand the business model. My Forex funds and FTMO been around forever. Feudal Crest, Audacity, been around for 5 years plus. Same as Feudal Crest, many, many years. Fiverr's been around for 5-10 years. These guys are an 8 cap one. Don't know. Jury's out. So just, there's no need. If you can't find what you want here, you're looking too hard. Honestly. That's prop. It's just, just read the rules. Do I trade gold? No. Any of you on CAD Swiss? So CAD Swiss will be affected this evening by the FOMC, and the Swiss franc will be affected by the euro rate tomorrow. So at the moment, we're very range bound on this. Big old propulsion gap there, which has been untested. We've got that area there as well. So whether we get down to here will depend on whether or not the US dollar weakens or strengthens and whether or not the euro strengthens. So if we get negative comments coming out of the Fed this evening, which weakens the US dollar, Canadian dollar will weaken. However, the CAD is driven a lot by oil, and oil potentially has got the power to move up. The Swiss franc will be driven with the euro. The euro had a positive interest rate rise and a negative reaction to the currency. So it's been coming down for 4 weeks. Don't forget the banks move in 4 to 12 week cycles. So the fact that we've had a positive interest rate rise on the euro and a negative movement doesn't mean that that is the direction it should be going. It means they're pulling back because they overpriced the last interest rate rise to 4.25. Therefore, when we get the 4 this time, we should get a positive move on the euro. So that will power up the Swiss franc, which means that the CAD Swiss, when the Swiss powers up, comes down. So where we are at the moment, I think there's a high probability of a short, basically because I think we're going to get either neutral to negative movement moving forward on the US dollar, and I think we're going to get positive movement on the euro and the Swiss. I'll be looking for shorts. Right now, though, it's just sideways. I mean, the last trade I had was there. It hasn't given a trading opportunity to me since there or there. Yeah, that volatility. We haven't had any volatility. It's just range bound. A little bit of movement, range bound. Speaking of movement and range bound, buy a scorecard. Look, totally range bound. Look at that. We've got 1 buy, Euro New Zealand, 1 sell, Aussie US. Everything else is sitting between 3 and -3. Total indecision, range bound, no fundamental advantage anywhere, cop biases weakening. It's just terrible. I think this is probably why we're getting a few squeezes at the moment, because the banks are struggling to make any directional bias. So they're squeezing the crap out of people. Just not happening, is it, at the minute? But waiting. We've just broken that high. So you're coming up to the weekly high on DAX. Not a very good level, this DAX. So this weekly level we've got coming up here is this one here, which is the 3 week ago high, which is basically the open of last 3 weeks, which is the end of last month, basically. So that's last month's high. So this level here that we're coming up to is just before last month's high, which is within ADR. So if we get a rally up to last month's high, you'll find limit triggers, so shorts there. So where we're rallying to at the moment, there's a potential bounce point coming up. It's the open of the month. Might have a reaction, but that I would say is probably more likely. So this whole zone here, if you wanted to sell anywhere in here with a stop above ADR, and we are going to pull back and do this gap fill, there's a very nice risk reward opportunity. M. Pierce is an English name, though. Yeah, I mean, you've got to make your own mind up on stuff. Yeah, you're all human beings. You've all got brains. Use them. Experience stuff. You can only take my word on my experience. I don't know. I've been funded with loads of prop firms. I've had prop firms which have stabbed me in the back and screwed me over on rules I didn't know because I didn't read. So whenever I get funded now with a new firm, which to be honest, I don't think I will, because there's no reason to. I'm happy with EA and my Forex funds, and I've no reason to go anywhere else. Feed or crest, after Brian's experiences with the news events and some of the rules that they've got to do with trading percentages of what you previously traded and stuff, there seems to be a lot of rules in here that kind of creep out the woodwork. They don't exist with the other firms. So my Forex funds make over $20 million a month in evaluation fees. They're not going anywhere. If they stop paying people, they will get a bad reputation. If they get a bad reputation, they will not be making $20 million a month. So you will get paid with my Forex funds. You get funded with my Forex funds. I've never had a problem getting paid. I've got a third-party contractor that pays us. It's all above board legit. I am a subcontractor for them. It's just, you don't need to hunt for prop firms. Retail sentiment heavily long CAD Swiss. So you do the opposite. Yeah. So retail sentiment at the moment on CAD Swiss. How long you want? Yeah. Oh no, there's another one of those crypto things crept in there. TRX. I need to remove that. So yeah, CAD Swiss. Retail 70% long. So it'd be a good short at the moment. Up at monthly highs as well, rejecting. Yeah. Okay, so we've just broken that high on the DAX. Really swore then. That's your pre-market 15 ORB today. Maximum trailing stop drawdown you've experienced is 160, 16 pips. 15-minute pre was 90. Who knows? Yeah, so CAD Swiss monthly high. Yeah. This is what I keep saying. Support resistance. Yeah. Intraday, it's very hard to trade that. Daily, it's very easy. Monthly limit order triggers happen all the time. We are holding the monthly highs. Just waiting for news, yeah, to trigger that short, which potentially is obviously coming today. Brian, me too. I went To close my open positions last Sunday, which was 29 of 30 days on stage 3, unfortunately, they shut my account down because it was the next day their time. They reset my account. I have to trade another 30 days. Rules. One thing I've learned is with trading prop is stay well within the rules. That one is obviously one I've not had. So I don't know that rule, but the $5 grand drawdown, daily drawdown limit, $4 grand, stop, because that variance of 1,000 can happen very, very quickly depending on how leveraged up you are. So just stay well within their rules. Yeah, if they don't allow you to trade 1 minute before or after the news, yeah, don't trade for that hour. Just don't give them any reason. If they require you to put a stop loss on every trade within 1 minute, use an EA to place the trade that automatically puts the stop loss in. The Price Action Toolkit will do it all for you. Yeah, just make sure that when they cannot come back with any reason which is very close to you not actually getting paid. My Forex fund, the reason I love my Forex funds is they are so relaxed on all the rules. They don't care. The business model is very simple. Everybody pays us $21 million a month. We are happy to give anything up to 21 million of that away to people that can trade within a set of rules, which is bloody hard to stay in. That's their business model. Some months they'll make 15 million, some months they'll make 5 million. Who cares? They live it, they keep it relaxed, they keep it easy, they keep it simple. Yeah. EAs, these rules about EAs. There's so many prop firms now. You can use EAs, but the EA can't do martingale, it can't do this, it can't do that, it can't do that, it can't do this, can't do that, can't do that. But you can use EAs. You wait until you see the small print on the EAs. Trading. You can use any strategy you like as long as you don't do this, and this. Half of the things in that list you'll never have heard of or know what they are. So they'll come back to you and go, no, you did that. But what do you mean? You used multi-currency arbitrage hedging. What? What's that? Oh, well, we'll explain. It's very grey area, but what we don't like is somebody takes a trade that way, then takes a trade that way within 7 days, because it's like you're kind of playing both sides of it. It's in your contract. That's obviously a stupid extreme, but there are rules in there. Martingale. We do not allow martingale. Define martingale, right? My EA uses a 1.3 multiplier. Is that martingale? Some firms think it is. Other firms class martingale, as I do, as being 2 times your initial stake. If you get in with 1 lot short, it moves up, and you take 2 lots short, that is martingale. If you take a 1.3, that is not martingale. So the definition of everything you have to check with the prop firms, because every one of them will have a different definition. Yeah, you just got to read the small print. And the small print's all there. And if you want to, and you want to be super diligent, ask for a copy of the contract you're going to get on your funded account before you do the evaluation. They will give it to you. They should do. I mean, I've probably got one. If you want a copy of a contract, I've got them all. So, and they all have slight variances in there. Slight things you're allowed to and not allowed to do. Like, you get paid in 10 days. On your first payment, your second one's 30. You won't find that out until you get the contract. Or we pay out in 10 days. But the first payment, you have to do 30 days, and you've got to trade for a minimum of 10. And during those 10 days, you cannot use a lot size different to 20% of what you used in the evaluation. That rule is not on the website. It's in the contract. Yeah? You just got to be careful, which is why I say just stop hunting. Literally, it's every day, isn't it? Every day, every other day, someone says, you've heard of this prop firm, heard of that prop firm? Load there, really good. Use them. Wayne, I'm running the ADR indicator. Can you show me yours quickly? I want to see if you have info. My chart reflects nothing. There are no settings on ADR. ADR is ADR. Yeah. ADR is the ADR indicator draws lines from the high of the day to the low ADR and the low of the day to the high ADR. It's a number. It's the average daily range. There's no settings. You don't have a choice. It is that. You do have a choice. You can change the ADR setting. You can use a different ADR. You've got ADR 10. Apart from that, there's no other settings you can change apart from alerts. ADR is ADR. You either use ADR 10, ADR 14, ADR 7, ADR something, but that's the only setting. You can't change anything else. That's the whole purpose of it. Everybody sees the same thing. You'll see a slightly different thing based on your broker. So, for example, on CAD Swiss, this swap low for me is there. If your swap low is there, your ADR line will be in a different place. Again, ADR is not going to bounce off to the pip. What we're saying is this is moved roughly what it does in a day. Nothing is exact. So if mine says 75 and yours says 73, somewhere in the region of 70 to 80 pips movement on Aussie dollar CAD is roughly what it does in a day. Something around. There's no exact science with anything. Rough. Everything's rough. Roughly 23% of the time it will move beyond its ADR 125. Roughly, something like that. So don't get bogged down in intricate details. Market moves up and down and sideways. No, and this is the thing about pips and variances. When you're scalping on the M5 time frame with ADR, with ORB, for example, the difference in slippage that I've experienced this morning is roughly 50% of the opening range. None of that has any relevance whatsoever on any other time frame apart from the 5-minute chart at the open of the stock index. A piece of slippage on a 1-hour chart of 5 pips or 10 pips, and the grand scheme of things long term is going to make no difference to your trading results. When 50% variance is experienced with slippage on a 5-minute opening range breakout strategy where you're in and out within 5 to 10 minutes, it's the difference between passing and failing, the difference between blowing an account and not blowing an account. So, when you're looking at ADR, that's the amount of movement we are measuring. Yeah, this is not happening in 5 minutes. This is happening over a period of the day. You're lucky. You might get an ADR hit in 1 hourly candle if there's a massive news event that's a fundamental shift. Other than that, you're not going to experience an ADR move in 1 candle. Don't worry about the exact, but do worry about the overnight. Yeah. This is something you need to pay attention to. Different brokers will have different slippage, different spread on the swap. And finding a broker with no swap spread is not possible. They all do it. It's just the degree they do it to is variable. Some brokers are worse than others. 8-cap, for example. If you're using a stop loss on and again, I'm not harking on about prop firms, but if you have a prop firm that forces you to use a stop loss, so in here you can have stops required as a filter. Look, where is it there? Stops required. Yes. Okay. City Traders, Imperium, and Surge Trader require you to use a stop loss. Why? Because if there's a stop loss in the market at the overnight spread, they could spread it by half to an ADR to take you out and then bring the price back down to where it was. That's why they force you to use a stop, because they know that there's a high probability that you might get stopped out on trades which are actually profitable with a loss. Another rule, all in their favor. You don't need a stop loss. They're going to close it. All these prop firms, if you hit the maximum daily loss limit, it auto closes your trades and freezes your account. All of them do that. Why force someone to have a stop loss? They're going to hit that max. You're going to shut them down anyway. So why force a stop loss into the market? Because people might blow their evaluations and take another one. Difference between using a stop loss or not using a stop loss, 3 evaluations to pass or 5 evaluations to pass. That's $1,000 difference for the prop firm. It's just, rules. Rules are there for people to make money out. When are you planning to release a new EA? I don't know. There's no plans on it. I might not do anything with it. I'm forward testing this at the moment, and the back testing results don't give me any edge. If you look at the original opening range breakout strategy, EA, return on drawdown, profit returned, there's very little difference with this new variation that I'm running to the old one. Very little. Some days loss recovery works beautifully, other days loss recovery doesn't. I'm trying to find something that is more psychologically pleasing. The problem with the ORB, with a lot of people, myself included, is you take that initial break. If that break fails, that's it. What do you do for the rest of the day? People need to do something, right? So what the idea of taking an inside bar break and other loss recovery systems after the initial ORB is to keep you in the game for the session with a high probability strategy still, but it doesn't produce a better result than the initial opening range breakout edge. So what I might do is incorporate into the old ORB some new kind of loss recovery systems. But I'm still playing with what's best to use. Yesterday was the first day the inside bar breaks got killed. Absolutely destroyed. Loss after loss after loss. So the initial ORB there was beautiful. We had a short there, which worked. We had a long there, failed, a short there, failed, a long there, failed, a short there, failed, a long there, failed, a short there, worked, a long there, worked and broke even, and a tiny little win. Yeah, 3% loss. None of those winning trades recouped that because the market was rotational. So if you don't make the money on the initial ORB, what we're saying is, if you think about it, that didn't work. Let's hope we don't get a rotation day. What's the odds of not getting a rotation day? Doesn't help, does it? It could make it more painful. However, 2 days ago, we were sitting in 2-3 grand loss after the initial ORBs in the New York session. By the end of the session, we were 3 grand up because the inside bar breaks recovered all the loss and made loads of money on top. Yeah. Some days it's good, some days it's bad. I don't know there's any advantage in releasing something that doesn't have any real edge or advantage over what I've already got out there, which works absolutely fine. So I'm doing testing. I'm doing more testing. I've recoded it. The trouble is I keep doing testing, getting great results, but there's nothing here I'm not looking at this going, wow. What I'm looking at is somewhere between a 3 to 5 return on drawdown in that top 40 results. I've got a 3 to 5 return on drawdown already in the product out there. I'm not looking at this going, this is so much better. This is different, but the same. Yeah. The drawdown, virtually the same. The return, virtually the same. It's not giving me anything. Therefore, what's the point in? So I'm looking for something that's going to give either a better return on drawdown or is going to smooth that equity curve. What I'm looking for really is to smooth the equity curve. So the lost days, I want to try and make them smaller. So it doesn't necessarily have to produce more profit, but it has to reduce the drawdown. So if it doesn't have a positive impact on return on drawdown or on overall drawdown, then why bother with it? Yeah, the ORB works fine, absolutely fine. It does everything that I'm testing here. You can test the pre-minute, you can trade the pre-minute 5, the pre-5 minute break, you can trade the pre-15 minute break, which is working well. The 5 minute ORB still works beautifully. What you do after that is what I'm investigating. And you're only going to do something after it if the initial move fails. So we're looking at trying to solve a problem that may only occur 50% of the time. See what I mean? It's just, I'm not just going to stick something out there for the sake of sticking something out. There's no point. It's just, I'm not in it to make a load of money out of selling indicators and EAs. I'm in it to try and get something that's more efficient for prop trading. Before they decide to all change the rules and say you can't use EAs, in which case then I just trade it manually, which I am trading manually at the moment on some of these. But, well, I'm not actually. That's a lie. I'm copy trading. So they think I'm trading manually. Because some prop firms allow you to use EAs for copy trading, but they don't allow you to use EAs for trading. What they don't understand for some reason is that your EAs are on the chart. So you are using an EA for trading, but the EA is just copying an EA. Again, there'll be something in the rules on those firms that will get you. Right, I'll leave it there. If anybody's got anything else they want to look at, shout now. Otherwise, 1:30 this afternoon, we have PPI. And obviously that's going to make the market have a little bit of a reaction. May move big, may not. Unlikely, I think, ahead of FOMC. So 7 o'clock this evening is the Fed fund rate. If the Fed fund rate comes out as expected, I doubt we'll get a movement. We'll get a spike. We may get a big move and a hold. That's fine. But 7:30 is what you're concentrating on this evening, which is the press conference. This is when the Fed are going to tell you what is moving forward plans for interest rates. At the moment, what we are expecting them to say is this is our terminal rate. We will hold it till November. If they come out and say anything different along the lines of inflation's coming down faster than we expected, therefore we will be open to reducing rates sooner, the US dollar would collapse. Should collapse. But that's what we've said about the euro. Positive rates should have increased. The New Zealand positive rates should have increased. They didn't. So for all I know, the US dollar could absolutely rally to death on the fact that they're going to reduce the interest rates. I don't know, but we will see. So that's where it's all going to kick off, 7:30 this evening. So for the rest of the day, I would sit there and not do a lot. This afternoon for the New York session, I'll be here. I'm not expecting a lot out of the markets again at the open. Reason being is we've got a major news release an hour before the market opens. So a lot of the stock market volatility will be dropped in at 1:30. So they won't have a lot for the open. Same as yesterday, big rotation day. Why? We had CPI come out an hour before the open. We got PPI an hour before the open today. So quite possibly going to get a whipsaw and rotation day again. I'm going to let the EA run it on this account just to see what it does. Obviously, just more testing, but I wouldn't expect a huge amount of movement today. Yeah, it's all going to be geared around this evening. So always is with FOMC. It's the big one. So we'll see what happens. I'll be back at 2:20 though. Obviously, we will trade the New York session and obviously back tomorrow morning, 7:50, same time for the usual stuff. So if there's anything you need, let me know. I'll be in Telegram. Other than that, I'm just going to be working on some EAs. Brian sent me some stuff to work on as well. To do with FX. There he is. One stop out. 2 1R hits with the ORB on EU so far. So 1 stop out. 2 1R hits. So that's there. I presume that's the second, yeah? So stopped out, paid for that, profit. That's good, isn't it? This is the problem. It all works on paper and works in real life, but when you backtest it, we got to try and find out why it doesn't work in backtesting. I'll test your I'll test your set file today, Brian, and it's on my to-do list to have a look at that today and test that. So there's a way. There's a way. I get the feeling we've got. I think with this, and this isn't normally something I would ever look at with an EA. I think this is going to be very instrument specific because some of these instruments are going to move better after the Asian session than others. So I think it'll be one of those cases where we should only be trading certain instruments on this. And it's finding those, which is fairly quick to backtest. So especially if we're using the 1 hour time frame. But I'll have a look. But yeah, looks good. But for discretionary trading, one of the things I've found about the ORB EA, just before I go, is if you well, this would be a test. I haven't even tested if this works yet. If you backtest visually and actually watch the P&L figure, it gives you an idea on what you're going to do. If you're using this for semi-automation rather than full automation, we've got obviously the closed profit and loss, yeah? If you're watching this at the ORBs, right, like that now, it's sitting in $570 of profit, yeah? Now we're sitting in $2,100 of profit, right? So we've run up to 2.2. We've run up to 2.5. Yeah, 3.1. Right, so 3,100 profit. Yeah, this is a new version. I literally finished coding this 5 minutes before I went to an exercise class last night. This is the first time I've actually run it. So that's not doing what I want it to do. Trading is, though. So that run up to $3,200 in profit. We ended up with $2,600, yeah, on that ORB. Happy days. But what you'll find is a lot of the time you'll see trades that go into profit very nicely, come out, and they close out either a very tiny profit or a loss. In the real world on prop, yeah, and bear in mind the ORB strategy is very good for prop because it's quick money, fast, intraday, going to make that cash fast. In the real world, let's say, for example, that $2,600 that just made, it had a trailing stop on it, which was different. And that trailing stop made it make, let's say, $800 in profit, right? What in the real world you probably would have done is gone, that's my mortgage. I'm banking it here before it dropped. And that's what I think you're experiencing, Brian, with this euro, is you're using the EA to get you in on a mechanical rule. And then when you have the money, you take it. So where you've had that example today where we've gone long, stopped out, we're down 1R. It's gone down 1R. Take that money, right? Reset. Okay, so I've lost nothing today. Let's look for the next opportunity. That's what traders do in the real world. In mechanical world, this follows a set of rules, and that set of rules will make a very different experience to somebody that is seeing $3,000 in profit on their P&L and thinking, my God, the trading stop here, if it comes down to it, means I'm going to make $600. What am I going to do? Pay my mortgage right now or hope for the 10R, but take the 600? You're going to take the 3K. So, you know, when you're backtesting, I always start with this form of testing, visual testing, because I want to see what is the capability of this? How much can it make? It's closed $2,200 in loss so far, right? We're sitting in $1,200 of open profit. So when this thing trades down, that's $2,200 lost. We're sitting at $1,600 profit we had there for a second, right? That candle is still going. That's great. $1,600. Now it's pushing up again. What I'd be thinking as a trader watching this now is, this is an indecision candle at that previous low. It looks like they're starting to buy this level up at this resistance. I would go, I'll take that 1,200 and halve that risk, and we'll have another crack at another entry in a minute. If we let it play out, it managed to make an $892 loss. Right? That result in the real world watching this thing is going to be different. And if you watch this in the backtester, you'll be thinking, yeah, but I would have taken that. Right? 1,300. So it's banked 1,400. It's got 4,500 open price. Prime example. Right? It's banked $1,500 there. Yeah. We pulled back, accumulated, and then it broke that high. Since it broke that high, what it did was hardly any pullback and slammed high again. At that point, we had a tiny little pullback, slammed high again. Pulled back a little bit, opened, and we're pushing high. This is sitting in $4,500 in open profit now. This is not realized. If this comes down, that $4,400 we're looking at there is going to turn into something like $2,300. As a human being, I am not going to let that 4,500 turn into that. I'm going to close that. I am going to say to my prop firm, thanks very much. I'll wait 5 days and then I'll press the payout button. And I'm going to move on to another evaluation. However, the EA will have done what the EA will have done. Yeah, made $6,500 profit. So it would have been better for me not to have closed it out, and it would have been better for me to let it run. But you're not going to do that in the real world. If you're actually watching this take trades for you, you're going to react differently. You're going to close things out manually, as I do. And I think most people do. So the edge that you see playing out in the backtest, if you run it visually and watch what's happening, you will find that actually you might actually make a lot more money. Because on those winning runs where you get those 2,000 run-ups and it drops down and makes you 400, if it does that 3 times in a row, that's 6 grand you could have banked. It's discretionary, but it shows you what the potential is of making money. Like there, we're sitting at $800 profit now, $1,000 profit. Yeah, the actual outcome of that trade was $1,800 loss. It was sitting in $1,000 there. For a lot of people, that's a third of a month's salary, half a month's salary. Yeah, in one 5-minute candle. Would they have closed it? Maybe. I took an $1,800 loss. With flip long, we're now sitting in $2,300. So what I could do right now here at this high is close out and bank $733 for the day, walk away and go and play with the kids and do something else. Or I could get greedy and only make $300. See what I mean? So watching this P&L figure with the ORB EA in visual mode, and this is what I think you need to do, Brian, is, which you're doing obviously by trading it live anyway, but run it in the backtester and run it visually and see where you get to financially. And then you can fine tune your profit targets for getting out at those particular points and you can make more money. You get a much more stable profit curve. Whereas in the backtest, when I'm running them and doing the system parameter permutation tests, all I ever see is the end result. $86,000, 5.19 return on drawdown based on an 11% drawdown on account. I have no idea how it got that unless I run that exact set file visually. P&L, the profit curve on that thing could be over a year. It could go like this. Yeah. So that's a year. So you sat there for 4 months and didn't make any money. You had a month where you paid your mortgage for the next 6 months and then you didn't make any money for a month. Then you had a month where you actually made some money. Then you made no money. Then you blew your account. Then you made a bit more money and you sat there for 4 months making nothing. Is that a good EA, a good strategy? No. That doesn't tell me anything. All it tells me is it doesn't matter what settings you use, you will make money long run. This is the problem with the ORB, is when you trade it in real life, I've missed all of that. That makes me cross. There's emotions involved. There's no emotions involved in backtesting results. But when you're doing it in here, there is emotions involved. $2,200 loss, sitting in more loss. That's managed to make $4,400 loss today. I don't know what this is doing. It's not doing any loss recovery because this is a new version. I haven't even tested it. Look at that. Stop out. Stop out. Hate you. I've no idea how much profit that is, but you're looking at 5, 10K. That didn't need to be that. Whereas realistically, what I probably would have done after that whipsaw is gone like that. Excellent. I mean, that's what I would have done because I'd seen that first 5-minute whipsaw. I would have gone, I need to bracket this. How do you teach the EA to do this? This is the thing. There's so many things you would do as a human being that are going to be different. And when you see it unfolding now, I've been thinking, right, I need to have if candle close as X percentage of the entire range as a body after the initial 5-minute range, close all orders and bracket that, because that's what the break is going to be today if it's going to go. If we're going into rotation, stop if it doesn't work the first time. That's my logical brain thinking after seeing thousands of hours of this rolling past me. But you can't teach the EA to do that. When you're trading real, you will. So you need to do this. This is a very important thing. This is obviously not taking any, I've broken something in this. Why it's not taking additional trades. I can't remember what I've programmed it to do. Re-enter if last close inside last 3 bars. That's obviously not working. Didn't finish the logic on that. But anyway, so yeah, I'll leave you with that. So that's what I think I need to do, Brian. That's what I'm going to do anyway. I'm going to go and run that and see what happens. And then that gives you an idea of, let's tweak the settings and see if it's better to do this. See how we get on. It's got potential, definitely. Aussie, New Zealand, I'll leave you on. Happy days. There's your resistance bounce, propulsion gap, sell. So let's get that new low in and let's get out of this thing today. All right, have a good day. I'll see you guys this afternoon. If not, I'll see you tomorrow morning. And yeah, we'll analyze the fallout of FOMC in the morning tomorrow. But I'll be back at 2:20 this afternoon for the New York session. Have a good day. I'll see you then.